Hey folks, welcome to a product review at Finominal. Today we're going to look at Navigator's Tactical Fixed Income Fund, which trades under the ticker NTBIX. Now this fund manages around $8 billion and allocates tactically between US Treasuries and US high-yield bonds. Now we've done plenty of research on tactical asset allocation ETFs and funds, and unfortunately most of them are quite poor at tactical asset allocation. So let's explore in terms of how this fund has done, and we are going to kick off with a benchmarking exercise. Now if you look at the fact sheet of NTBIX, we do see actually two benchmarks, which is one US high yield bonds or US aggregate bonds. Now we are going to select US aggregate bonds, but you can also see that our suggested benchmark is the S&P Targeted Risk Conservative Index, which is an equities bond combination. And if we compare the performance of this Navigator Tactical Fixed Income Fund to either index, it actually has outperformed both since 2014. And we can see, especially compared to the US Ag bond index, it's done quite nicely in that 2002 period when bonds did not do so very well. Now let's find out more in terms of what this product does by running a returns-based factor exposure analysis. And we're going to use the S&P 500 for equities exposure. And if we go to the factor betas over time, we do see that there is, consistent positive exposure to the S&P 500 or equities, and also consistent positive exposure to bonds, but it's been time varying across this period between 2014 and 2024. And that kind of makes sense because it is a tactical fund, right, which, as mentioned earlier, allocates between US Treasuries and high yields. US high yield is largely driven by equity risk, so we're not surprising that we see equities and fixed income exposure in this product. Now in terms of alpha, or in terms of value creation, we can look at that as well. We do see that the return contribution, is primarily equities. There is very little actually that can be attributed to bonds. Having said this, there is a large amount of unexplained return, and that's probably simply highlights these tactical asset allocations that in this case seem to have been accretive, that they happened at the right time, and that's of course something that we can validate as we look further into NTBIX. Now this is for this fund on a standalone basis, so we can already see there has been a significant amount of value creation, and we can dig into that, and we're going to do that by comparing NTBIX versus a few peers. So we selected four kind of tactical fixed income ETFs and mutual funds. I think a couple of them can actually go long and short. Let's first of all see if they are comparable. And what we're going to do is simply measure the correlation of those four peers as well as NTBIX to stocks and bonds over the last 11 years. And what we do see that they kind of like dots on this matrix, right, which is simply the correlation to stocks and correlation to bonds, are in a similar space, which means they've been comparable in terms of offering similar equity and fixed income exposure. Stated differently, they're kind of like relevant peers. Now, from a performance perspective, we do see that NTBIX, which is the kind of like blue line in here, is kind of like in the middle of, at least compared to three other peers. There is one which is a product from PIMCO, which just generated much higher return. Having said that, when we eyeball this chart, the one thing that we do notice is that NTBIX has had considerably lower drawdowns in crisis periods. We can see that over here, where there is, some differentiation to, for example, a product from PIMCO. But much more interesting is the COVID crisis in 2020, where effectively we can see kind of like the drawdowns in all products, but a much smaller product drawdown in NTBIX. And we can look at that in a little bit more detail down here, where we see the drawdowns of those 5 products during crisis times. And we see, for example, during 2022, when bonds sold off and equities, NTBIX had the second lowest drawdown, much lower than some of these other products. But what's most impressive is actually the drawdown during the COVID crisis, which, like, a negative 3% is almost nothing. You can actually see in some other sell-offs, the performance is actually positive. So this actually offered diversification benefits. And so this seems to indicate that NTBIX, which is moving between US Treasuries and fixed income, that their tactical asset allocation has historically worked quite well, in a sense that it avoided some of the significant drawdowns in equity and fixed income markets. Now, that kind of like drawdown profile, rather that impressive drawdown profile, that is also something that you can see from a risk-return perspective. So here you can see the volatility of all these 5 funds. You can see NTBIX has a lower volatility than some of the other ones, but still looks fairly attractive from a CAGR perspective. And so effectively what you can see is that it, I think, has the second highest Sharpe ratio of these 5 funds after the product from PIMCO. And so this kind of concludes our analysis of Navigator's Tactical Fixed Income Fund. And I mean, the most interesting aspect of it that, as mentioned in the introduction, most tactical asset allocation products do not achieve what they aim to do, which is being tactical when it's helpful, in a sense avoiding drawdowns. But NTBIX seems to have achieved that, and as mentioned, the reduction in drawdowns, which you can see especially during the COVID crisis, has been quite impressive. So that's with regards to NTBIX. Naturally, it's quite interesting to find out what exactly they are doing, right? But like, hey, that's the secret sauce, right? So there is not that much we can find about that. Kind of interesting product to look at. Hope that helps. Have a nice day.